Good evening. Ira Epstein, and here we are. Thursday, the 18th of August, dog days of summer, light volume, and it is a rough markets on this August 18th, 2022. Don't try to make something out of nothing. Volume on stock index trading and the stock market itself probably down 25% in that range right now, off the norm. You'd expect that. I had my family in yesterday. I've got friends in town right now. And that's what you're doing. You're saying goodbye to summer. You're wrapping things up. Big barbecue plans are going to be for everybody. And then we turn our attention back to the markets. But don't get too carried away here. Because next week we have the symposium, Jackson Hole. And that is a monster meeting where all the central bankers come in. Now, I don't think there's confusion with the Fed yet. If you watch the stock market analyst on TV, I think that there's confusion. The Fed doesn't know where it's at. I think the Fed knows exactly where it's at. I think they're data dependent. I think they're looking at hot inflation. They realize it might come down quicker or slower. They have to see what the data says it's going to do, and they'll adjust accordingly. What is so difficult with that? The question that the market is fighting is, does it all happen right away? The market wants to know the day, the month, that they're going to absolutely be able to pivot back to easy money. How? The Fed doesn't know. How do you think they're going to be able to tell you that? What if inflation goes from 8.5% down to 6, 5, and it sticks there? Do you honestly think they're going to be comfortable with it sticking at 5? They're not. There'll be that trajectory move down. That's what we're all assuming. The Fed will look at it. They're not going to get trapped by it. And they're going to look like I'm talking. Where does it get sticky? And what do they do about that point? They'll be looking at the data, how the numbers are coming in. Of course, we got to worry, is inflation going to come back in the way of energy come the fall and winter? It's very possible that that'll happen. We don't know how the grain harvest is going to come in. I haven't the slightest idea what these crops are going to be worth. I have no idea at all. It's still soybeans in the teens. That's a big number, any way you want to cut it. Corn market, no, it's not $7 corn anymore, so that's a problem. The farmers had a big window to take advantage of it. And in wheat, come on. 24 ships have already left the Ukraine with numerous grain, but a lot of it wheat. What do you think that's doing? And you also had, I believe it was Iran, backed away from a big order of wheat, thinking they can get better prices or whatever the case might be, and that put some pressure there. As for the bonds and notes, it's marking time. It's August 18th. They want to get closer to the FOMC meeting, but maybe we get some tips on what to do this week as we hear what the Fed members are saying. Now, today there were a slew of them out. I wrote about what each one said in my full research report, and that brings me to this before we go into the charts. If you want to see my research, other people get a sampling of it with no money on your part. All you need to do is take your cursor, follow my finger here. You'll see an icon at any point during this video that you can bring down. Click on it. It'll take you to the free offering area. Choose what you want. We'll make sure you get it. Can I be simpler than that? Pretty simple. Going right into these meetings. I'll be writing about it in detail and trying to figure out what to do from it. Now, at this point, the dollar has gained the strength at the expense of a number of currencies. Even the peso that I thought was going to be the Mexican peso strong, today lost its embedded reading. Game over as far as I'm concerned. When I look at the S&P 500, it has stayed nicely over the 18-day average of closes. If you're super bullish here, that means you think you're going back up to the all-time high. Tell me another number that you're looking for. If you're super bullish, that's the camp you're in right now. So if you're a buyer here and you think everything's going to keep going up on these indices, and that's a logical target, you're saying that the Fed's moves won't matter, that the stock market's going to go, and you're of the belief the Fed is not going to be able to fulfill its target or gets to it much earlier. I don't know which one, but that's your bet. When I look at the chart, I see that it's gone from June. One of you wrote, Ira didn't catch this move. You're right. End of discussion. My work was bullish. I write about it. I said it. I couldn't get in under my terms. That's a big, long time not to get in. Then I didn't want to get in. Now, I had COVID terribly. You all know it if you're regular watchers. I had to take time off. Then I had surgery. So those two combinations didn't help me either. I'm healthy again. I don't have COVID. My mouth's getting better by the day. Okay. So now I'm looking to get in or go short or long, whatever the work says. I look at it. You've got higher lows, higher highs. It's bullish. But I'm not going to buy into the 200-day average. The first time you hit a 200-day average for months after you haven't hit it, like you did back here, you can poke over it for a little bit, but you generally get thrown back the other way. That's what I think is going on right now. So between Jackson Hole getting up to that number, you own it. I don't want to own it there. Bollinger Band. The combination of the Bollinger Band 200-day average, generally pretty lethal in terms of the ability to stop a trend in its tracks. If you lose the embedded reading, and you have not lost it, please understand that. It would take a reading under 79 on a closing basis. If it occurs, I think you'll drop right back in very quick order to wherever the 18-day average of closes is. My dilemma in buying the market here, I'll share this with you, and I've shared it with my subscribers, is there's a key moving average that's saying to buy the market. I know it. I teach it in my enhanced Bollinger Band course. But it's too close to the 200-day average. So what I do is just what I told my traders. I said, what do I teach you? I teach you there's several things in my course that I talk about. Number one, how often do you hit that key moving average? I never show it here on these videos. There's a time element after you hit it a certain amount of times where in futures you step away because it's not going to keep hitting it and succeeding in the trend. That's what I've discovered. The second thing, whenever I'm near a major moving average and it's saying buy me for right there, I go, well, why am I playing for that little bit? What if I, could keep going, of course, but more times than not, that key average in the Bollinger Band will stop the rally. In the NASDAQ, you're flirting with losing the embedded reading right now. Flirting is that. I'm winking at you. The girl's waving at me. I'm all excited in my car. Could be a guy waving at me. I'm all excited in my car. And the market is now losing it. If it stays lost, I think you're going back to the 18-day average. And what that would do is break the uptrend. You would then have a higher high, and if you take out this low and lower and low to get down there, and you'd want to be neutral from my point of view in the market. You haven't done it yet in the Dow. The market is over the 200-day, but unable to stay over the upper Bollinger Band. So like before, you can get up to these numbers. You saw it better in the S&P, but you don't stay there very often, just like here. I call that the rarefied air. Then we get into the Russell. Now the Russell stopped right at the 200-day in the upper Bollinger Band, and it too is now getting ready. Any further breaks tonight, you will lose that embedded reading. You can see where the battle is. I feel comfortable in what I'm saying. This is not a zone that I want my subscribers to be in. That's all. I'm not bearish, but I'm not telling them to buy either. In the VIX, you have an embedded reading. In order for it to go up and back to wherever that 18-day average comes in, the red line's got to get back over 21 on a close. That will do it, in my opinion. It could happen in one day, but that's what I'm looking for. Then we get to the bonds and notes. When you drop in the futures, it means interest rates are climbing. Does this look to you like a Fed that's going to stop raising rates? If you think so, great. I don't see that. I see an oversold market that is paying attention to the 100-day average in green and the combination of the Bollinger Band and the smart money. Oversold says, hey, I'll back off. I don't know that there's enough left there to get short and stay short for another move just yet. In the 10-year note, are we going to embed? So let's see if I can get this to work. It's not going to let me. Some of the charts let me do it, some don't. Like right here, is it going to let me? No. It's going to move that. You might get 3 days in a row here. You got to get another day. And if you embed, it means that on rallies, you're going to get aggressive sellers. But right here, What number's been supporting the market? If you can't see that green line and how the market's been hugging that to get down to the combination of that and the Bollinger Band, get your eyes fixed. It's right there. That doesn't mean you can't fall through it. But is there an edge here? Well, if you embed, there will be to sell the rallies. Until it embeds, and it hasn't done it yet, no, there isn't. The next thing is the dollar index. So at the dollar index, I'm curious if this will see. This one's going to let it work. It's the strangest thing sometimes, okay? I don't get it. The dollar's gone from the lower Bollinger Band right up to the upper one. And that's what happens. What did I say? I know what I've been telling you. You don't want to be short anymore when you hit the Bollinger Band. You're not embedded. You haven't locked in a trend. Now you're up here. You're overbought. Up there, what do you think I'm going to say? No, you don't. The easy money in the dollar's over. Walk away from that trade. You only stay over the Bollinger Band 5% or under it 5% of the time altogether. In the euro, the flip-flop of the dollar. Now you're to the lower band, oversold. This is where the pros are coming out. And you've gone from the upper Bollinger Band to the lower band. So that sideways action where I told you it's a very difficult trade when you narrow in the bands like that, it's exactly proving what's true. Part of trading is knowing when not to trade. Anybody can be in the market all the time. Anybody. And that anybody probably doesn't make money. It's picking your spots, having your stop, knowing that, hey, the trade didn't work. Lots of trades don't work. You don't want to lose your account on a trade that doesn't work. You don't want to break your disciplines. You want to say, hey, it didn't work, I'm gone, and mentally get rid of it. If you did everything you're supposed to, the pattern just didn't work. That's how charts go. But more times than not, if you have a good system, you should walk away with some money in there. Overall, that's the goal, right? Hard to do, but that's the goal. All right, British pound. Got to the upper band and instantly to the lower band. Instantly. All right? Now, as I'm seeing everything I'm reading about this, they're going into a full-fledged recession, a big one. And Miss Truss looks like she's going to be your next prime minister in September. She wants all kinds of stimulus packages, helicopter money to help everybody out. Pay for the energy, cut taxes, maybe give more. Why not? The U.S. did it, and we're in pretty good shape. I have a feeling you're going to see that out of that. Bitcoin. You peaked out against the upper band. You're in this sideways action. Don't look for a big move here. This is just the churn. You've entered the summertime churn in market after market. Appreciate what you've got. Brent versus WTI. Well, it's certainly not staying at a $7 difference. It's hanging here still at about $6.30, $6.50, back and forth. You bounced away from the lower band both times, making runs, at the 18-day average of closes. I mean, if that doesn't tell you when you hit that band and you're not embedded what to do, shame on you. You're just not understanding. And WTI, same thing. Each time you've hit that, and I know you're going to tell me, it looked like it was going to fall apart, Ira. I don't understand. I do. That's what it is. It's not me. It's that other people are watching it. You get a herd together that understands how this works. And what you want is the edge that you have something a little better than the guys that think they know how it works. I think I have that in my enhanced Bollinger Band course. At the very least, you learn something. The best, you really learn something. In any case, higher high, lower low, I don't see anything there. Gasoline, I don't want to be short gasoline here. As I said, people are driving. I was out on the road, I told you 2 days ago, jammed. I was talking to my brother-in-law. He said, yeah, roads are very, very crowded as you hit anywhere near the cities. You know, in the country, it's one thing. But that's what's going on. And this will be the last part of the driving season. After that, we have to adjust for fall driving. And that's a whole different world that you want to be looking at. Last, the natural gas. Everybody wants natural gas. Everybody. So there's a floor underneath all of this, because once you can get to the point where you can export it again, we are exporting gas, don't get me wrong. But when we lost that Freeport terminal, we lost, what was it, 1/5 or so of, I think it's 1/16 of what we did export. So that went back into the American market. That terminal will be back online by the end of the year. Everything I'm reading says they're making that type of progress. I could be wrong, but that's what it is. But I'm also looking at another event. Australia supplies 1/5 of world exports in natural gas. Did you know that? Primarily it goes to Asia. But now the natural gas prices within Australia are going up so much that the regulators are starting to look at it and go, maybe we got to curtail this. They're sending it abroad and they're hurting us in the process. Whenever you get the government too interested, it never ends up well. It starts with the U.S. government, but whether it's an Aussie government, the U.S. government, they don't know what they're doing. These are bureaucrats. They're not businessmen. They have no idea. They'll go, well, if we stop it, it'll be just fine at home. Sure. All right. That's how I'm reading it. So I want you to be aware of all that. It's important. What do you do now? You take your cursor, move it to the top, look at the free offers, and take advantage. I'm Ira Epstein. I'll see you over the weekend. You have yourself a great trading day tomorrow. Take care.